Hey, Savvy Squad. Welcome to another episode of the Dr. Seb Talks Money podcast. Well, today's not a podcast. Today is a live stream just on YouTube. I'm so used to saying podcast. So today we're going to be talking about investments. And just want to, before I get started, just want to remind you that this is, or to tell you that this show is going to be educational in nature. I'm explaining what these investments are. In the event that you are wanting in the event that you are wanting to um, invest, I strongly suggest that you seek out the advice of a financial advisor or investment professional who can tell you which one is a good match for you based on your other financial situation. So let's jump right into it. Okay, so the first one I want to talk about are stocks. And this one is very common. Everybody pretty much know. Well, let me take that back because I cannot go on the premise that everybody knows what everything is. So stocks are where you can buy individual pieces of a company. So they represent ownership in a company. When you buy stock, you're buying a small piece of that company. For example, Apple. If you were to buy a share of Apple, you're buying a small piece of Apple. If you were to buy a small share of Nike, you're buying a piece of Nike. And this is how they work. The company, if the company grows and does well, the value of the stock goes up, and you are able to, if you sell, get a return on your money. So let's say you bought a share of Apple for $200 and the stock goes up to 300 and you sell, then you've earned, or you've earned $100. Of course, there's tax and all that, which I won't go into. So, and then you can also get stocks that have dividends, that pay dividends. And what that means is you buy the stock, and every quarter or every year, whatever the period is that they pay dividends, you get a piece of that money. So the stock can appreciate in value, and you sell it, you get the amount that it appreciates, as that Apple example that I gave. And you can also buy stock with dividends, where you get dividends. You get a payment every quarter or whenever they pay that out. So you get money both ways. You get it based on the appreciation, and then you get it based on the dividend. Stock can also be devalued, right? The stock, the value of the stock can go down. And if that's the case, then you probably want to hold on to it and not sell it, because you will be at a loss, unless you want to sell at a loss so you can offset other things. And I'm not going to go into the complexity of that, because that's more someone with tax knowledge that can explain to you what can happen where you sell your stock. You sell those that have appreciated in value, those that are depreciated, so you can kind of offset your losses. So the next thing I want to talk about are mutual funds. A mutual fund is a pool of money from many investors. So if you were to invest in, let's say, a bond fund, it's a pool of bonds that you are investing in. So you're not, whereas the stock is one company, if the company fails or if the company grows, you're impacted either way. Well, with a mutual fund, now you're having whatever fund you get, you are more diversified. So if one bond is not doing well, or one is doing well, it's kind of offset in the pool of funds. So you can have like a bond fund, you could have a fixed income fund. As you get older, that's something I'll just use me as an example. I do more move some of my investments into fixed income bonds, funds, because I know that, okay, it's going to pay me a certain amount each payment, right? It's going to pay me a certain amount. So that's the reason why I put some of my investments in fixed income funds. But there are a plethora of mutual funds out there that you can look at. And mutual funds are bought and sold at the end of the day, pretty much like the index fund. Okay. So again, it's a pool of funds. these are professionally managed. And we will talk about some that are passively managed in a little bit. Mutual funds are professionally managed. Consequently, the fees that you pay for a mutual fund will be higher because somebody is managing that. Somebody is overseeing it and checking and moving things and making sure that the fund is doing what they want it to do. So because it's professionally managed, the fees for mutual funds tend to be a little bit higher. So the next one we want to talk about is exchange traded funds, or ETFs. You may hear them call it ETFs. They're similar to mutual funds, meaning that they're a basket of investment. There are a variety of assets that will be in the exchange traded funds, and they trade as a single stock. So let me give you an example. The one I'll use what I'm invested in, VTI, which is the Vanguard Total Stock Market Fund. And that fund has a little bit of all of the companies in the stock market. So I'm very diversified there because some companies in technology may not be doing so good, whereas pharmacy may be doing good, or agriculture may not be doing good, but um, um, retail goods may be doing good. So there's all the ups and downs are kind of weighted out in an exchange traded fund, similar to a mutual fund. So because you're getting a basket of fund, and it depends on which one. So I mentioned that I'm invested in VTI, which is total stock market. I'm also invested in the Vanguard S&P 500, which means it is a bunch of stock from the 500 top companies on the Standard and Poor's index. So I'm not only in the total market fund, but I'm also invested in the top 500. And there are different ones. There's a top 100. There are technology ETFs. There are just all kinds of ETFs. But the thing I want to tell you is not so much the type of ETFs, but how ETFs work. ETFs, again, are a pool of money you invest in a variety of assets. And so you are more diversified. The good thing about ETFs, or the thing about ETFs, I don't know if it's good or bad. You have to talk about that with your investor. The thing about ETFs is you buy and sell throughout the trading day. So if you see that an ETF maybe dropped and you want to get in on it, you have the opportunity to do that during the trading day with an ETF. Because remember, we talked about mutual funds. You can only buy and sell at the end of the trading day. And so again, the ETFs it represents diversification, and you can buy and sell throughout the day. If you want to invest in maybe all the technology company, you can go to an ETF that is technology based, or you can go to an ETF that's agricultural based or healthcare based, or one of those. But if you want to be diversified, you can go to the S&P 500, find an ETF that is mirroring the S&P 500, the top 500 companies, or the S&P 100, the top 100. There's also international ETFs. So you have a lot of opportunities to be diversified with the ETFs. The index funds is very similar. They're very similar to the ETF and the mutual fund in that they are a basket of funds. In fact, the ETFs, you have ETFs that are a group of the top 500, so the S&P 500. You also have index funds that are the S&P 500. One of the main differences is when they're traded. So you may have a basket of funds, the top 500 companies in the S&P 500, and you're invested in that in the ETF. You can trade throughout the day. You see the movement of the ETF. So the S&P 500, like VTI, the one that I'm invested in, you can see that moving up and down throughout the day. The VOO, which is again the total stock market, is VTI. The S&P 500 is VOO. That's the one I'm invested in ETFs. Well, for the index fund, you'll see that it will be the same thing, but the trading that you can only trade at the end of the day. So you don't even if the thing is moving up and down, you don't see that until the end of the day is when you'll see what the price is going to be. So if you're to buy it, uh, tell your professional that you want to buy index fund, maybe the index one of the 500. I think VTSAX, I think VSAX, whatever you want to buy as an index fund, that you want to buy it, they would not be able to execute the trade until the end of the market. Okay. So the last one I want to talk about is bonds. And bonds, these are a little bit safer. And these are where you are loaning money to the government, to government entities and corporations. They issue bonds because they want to fund either the government or they want to fund these companies, and you loan money to them and they pay you back. There's a set amount they pay you. So it's a little bit different with a bond than it is from the index funds and all the other ones that I talked about. There's some bonds that when you buy it, you know what the return is going to be based on the way the bonds are set up. So you buy a bond, you're lending money to the issuer, which is a corporation or a state. The five states with the biggest foothold on the bond market are California, Florida, New York, Texas, and Illinois. Those are the 5 states with the biggest foothold on the bond market. So I hope that's been helpful to understand what stocks are, how they behave, how you can invest in them, what to look for. Mutual funds, how you can invest in them. Again, mutual funds are professionally managed, whereas ETFs and index funds are more passively managed. So there are a group of funds: VTI, VOO, VSAC, VFIAX. All of those, you can look those up and you can see which ones they are. And you don't have to do anything more than just buying that bucket of stock or that bucket of investments when you're wanting to buy index funds or ETFs. And the last, of course, is bonds. And that bonds can be part of your index fund or your ETFs. So I hope that's been helpful. And if you have any questions, please put them in the chat or in the comment section of the video, and I will make sure to follow up. And again, if you are wanting to invest in any of these, please seek out a financial advisor or investment professional. My job is to do the educational part, and then they will help you with the actual investment. So this is Dr. Seb saying thank you so much for supporting me. And also, if you look in the chat, there should be a pinned post about joining me in my Patreon community where we talk about things like these. And I bring in people to talk to you about subjects that I am not very versed in. So if you want to be a part of, and I invite you to be a part of the Patreon community and where we talk about things like these. Here is the link. You can go in patreon.com/Dr. Seb Talks Money, or you'll see it in the pinned comment. Again, this is Dr. Seb saying thank you so much for your support. I appreciate each and every one of you who like, who watch, who subscribe. I appreciate you more than you know. Thank you so much and have a wonderful night.